There are two questions I ask myself every morning before the market opens. And the answer to those two questions are the primary tools I use for stock selection and developing a trading plan. I think a failure to go through this process is gross negligence for a short-term trader, and frankly, may handicap their ability to make money on a daily basis. The two questions I ask are, number one, what are the largest market participants going to be buying or selling today? And two, can I develop a hypothesis as to where they may be buying or selling based on recent price behavior? After I answer those two questions, I can then prioritize what to trade. And I can develop a plan on how to trade it. Now, for today's trade example, September 9th was the fifth trading day since Labor Day. During the first 4 trading days, technology stocks were sold heavily. In fact, 2 of the 4 days were downtrend days, which is highly unusual. That amount of selling caused a large drop in price of the Triple Q, which is a good proxy for large cap technology companies. The drop in price is what is described in trading as an oversold condition, which basically means stocks have dropped too much, too fast. And although sellers are in control of the market overall, the quick drop in price will attract buyers, causing a short-term bounce. Let's take a look at the multi-week 30-minute chart to illustrate what I'm talking about. As you can see on this chart, the Triple Q topped out a few weeks ago and recently formed a downtrend. I've labeled this downtrend the primary downtrend. Then last week that downtrend got steeper. I've labeled that the secondary downtrend. The rate of change of the secondary downtrend is too high to be maintained for a long period of time. So although the multi-week downtrend has a higher probability of rejecting a rally, the steepness from last week's selling is likely to be broken in a short period of time. And that is primarily what informed my trading plan for today and what I shared in our pre-market meeting with trainees and other traders. So let's zoom in on the price action from Friday and today so I can walk you through my thought process and my specific trade planning. Only one of two things can occur after a large downtrend day. There will be a gap lower or a gap higher. Either way, the market is setting up for some sort of bounce. On the gap lower, short-term traders will aggressively buy the open, looking for what is called a capitulatory bottom. A gap higher dissuades some from buying, thinking that there hasn't been a crescendo of selling and the risk-reward isn't great for getting long. Personally, either way, I'm prepared to buy. On a gap higher, I will use support and resistance from the prior day to look for the most likely areas that buyers would step in. And if those areas hold and the market begins to move higher, then my focus is being long the market. The flip side is that the primary trend is still down, and if the market quickly moves higher on the open to a prior breakdown area, there are usually sellers waiting to dump stock. Think about the psychology of those who are buying the prior few days. They got crushed, and they're looking to minimize losses as soon as there's any sort of bounce. Now, look at how things unfolded after the market opened. The Triple Q quickly popped to the bottom of the likely supply area. This is where I initiated a small short position. In this type of trade, in order to have a larger position, one of two things needs to happen. Either market moves up to the top of the supply range where the risk reward is greatest, or alternatively, I see such a high volume of selling at lower prices, I quickly scale up the size of my position. The way this played out was that the Triple Q initially failed at 454. It had a shallow pullback before breaking through the morning high. At that point, I started placing larger offers near 455, which was the top of the potential supply area highlighted earlier. I was able to quickly scale up roughly 5x of my initial short entry around the 455 price. Then luckily, it began to quickly reverse, and I was flat in my short position within 20 minutes. The selling then continued and offered a long entry at the first likely support area we had discussed in the pre-market meeting between 450 and 451. The reason for the buying into 450 is because this was an area where sellers had held price down the prior afternoon. 450 is also an important psychological price. As strange as this sounds, many market participants place their bids and offers around whole numbers divisible by 10. That is often why you will see a stock bottom at 100 or top out at 200. So as the Triple Q approaches 450, I'm mindful there may be buyers waiting there. As you can see from the 1-minute chart, the first time the price got to 450, it immediately moved $1 higher. Then it rolled over again, making a marginal new low. But what is more interesting to me is what happened for the next 5 minutes after it made that marginal new low. Buyers just stayed at 450 and no longer would let it go down. Supply finally met demand and it started to move sideways. This is called consolidation. The great thing about consolidation, it is very clearly defining your risk. This is where experienced traders will build large positions because they have small defined risk. If the consolidation breaks against them, their position, they exit. But if the consolidation breaks in favor of their position, they will increase their size and look for a trend. At around 11:30, the triple Q reclaimed 451 and then trended all the way back to the morning resistance. The 5-minute chart here shows 3 exits for a long position based on the morning's important support and resistance areas. So that basically summarizes how I approach this trading opportunity. It's important to mention that trading the triple Q on a daily basis is not a good idea. I usually will only trade it on days I believe the market participants are looking to put risk on or take risk off. Or at a minimum, I will only put on significant risk on those days. The reason why it was one of my focuses on this particular day was because the market had dropped significantly the prior week. And portfolio managers will usually show up for work on Monday after a large market decline and look to put some of their cash to work. This was the primary reason why I traded the triple Q, and luckily it worked out pretty well. If you have any questions about this specific setup or any of the content in this video, please ask your questions or put your comments in the comment section. I'll be sure to respond. See you next time.
So you're an active trader, not doing as well as you want, not doing as well as you deserve, and you just can't figure out why you can't become profitable no matter how hard you try. Well, let me show you why. This is your competition. The traders in this room. This room right here is full of elite traders, some of whom are making 7 and even 8 figures a year. In fact, our top guys have made nearly 20 million each in net trading profits in a single year. Let's head to my office so I can share more. So you're probably used to seeing videos of lavish trader lifestyles, trading gurus trading off of a laptop for an hour a day, heck, maybe even 15 minutes a day, and then them relaxing on some secluded beach for the rest of the day. Well, all I can tell you is that our traders train like pro athletes. They live and breathe the markets and are continually working on their trading skills. Because at our firm, that's what we found it really takes to make it in this game. I'm Mike Bellafiore, co-founder and managing partner of SMB Capital, one of the world's top proprietary trading firms located in Midtown Manhattan. And we're always looking for trading talent to hire and develop. And not just to trade in-house on our desk, but also to trade from their own home, entirely using our firm's capital. And we have numerous traders doing just that, allowing them to make upwards of 7 figures trading the firm's capital without risking their own money. But to even get a shot at something like that, you need to have the right training. That's why we're doing a new free online presentation in which we share how you can get an interview with SMB to become an in-house or remote trader, trading firm capital without risking yours and gaining access to all of our firm's coaching and resources. And the best part, you don't have to be a profitable trader yet. In fact, we prefer to mold profitable traders with our methods and our techniques. That's why we have just 3 simple criteria that can earn anyone an interview. We're looking for highly ambitious and determined traders who fit our culture first and foremost. So if you believe that could be you, sign up for the free 1-hour online presentation by clicking the link that's in your top right corner of your screen now.